Welcome to this week's Cattle Call. I'm Susan Littlefield. A variety of things that we're going to look at on this cattle market today include not only the weights, but movement, box beef, cash prices, demand. What's going on? How do we keep that large numbers moving through the slaughter plants? Where are we at number-wise? All that and so much more, as you can see on the screen. It's Brad Kooima. He's with Kooima and Barlick out of Sioux Center, Iowa. And Brad, I think we need to kind of start there. We saw some decent cash markets coming out of your neck of the woods.
Yeah, we sure did. There was some 125 paid here to a couple of different packers. That puts us squarely, solidly higher than the South. I mentioned that because that is characteristic of a bull market. Typically, the North has a tendency to maybe be a little less businesslike sometimes in our selling. And sometimes if we do get backed up a little bit, it's often here. But when you go premium, that's a great indication that that's not happening, that we're very current. I've talked on your program for a while that the numbers of cattle here, because we pulled forward the yearling crop because the weather was really mild for most of the winter up until that one little storm there at the end of it, that we pulled those cattle ahead and that the calves aren't ready yet. And so we are looking at tighter numbers in the North here too. So yes, nice to see, cattle that actually might even make a little bit of money here sold up at this 24 and 25. It's been a long, long dry spell in terms of profitability.
So what are you seeing for packer margins right now?
Well, the poor people there, I don't know, $500 to $600 a head, maybe. I mean, it's ridiculous. The boxes go up. We've gone up, I think, about almost $30 from 10 days ago on the boxes. The choice was up $8.64, or I mean, the select was up $8.60 yesterday. So the packer margins are huge. So, I think the producer's got a little more will now. I think he's got a little more courage. Going to bow his neck a little bit and say, you know what, these cattle aren't very fat. The futures are telling me the market looks like it's all right because the futures are, at least to the South, they're carrying a premium. So I think there's more to come yet on the upside of this cash market again next week.
As we continue to see the growth of the box beef, how is that going to equal out to demand and what the consumer is going to see as they get ready to do some serious grilling? Kind of a loaded question, I know.
Yeah, it's buddy of mine just said he came in from one of the big box stores and he could buy whole prime ribs for $9.85. I don't think that's high priced at all, but I'm a guy that raises cattle. I haven't seen anything real dramatic in terms of the way what the packer did, like say during the COVID baloney, where jacked those prices clear out of the sky. One must remember here a little bit that we are at a time frame here, calendar-wise, when this would be on any year, let alone this one, but this would be the time of year when you would expect demand to be at its absolute best because of warmer weather, but also because of one of the main key holidays. Statistically, believe it or not, the weekend that moves the most beef is Mother's Day weekend. I guess it's take your mom out to dinner weekend, right? And so then you got Memorial Day, then you got Father's Day, you got better weather, and then this year with all the pent up demand that we're sick of being inside, and somebody maybe wants to go and have somebody cook them a steak instead. I really think that the demand picture is. I've never ever seen it brighter, and that's just domestically. Global demand is fantastic. Year to date exports are the best it's been in 5 years as well. So let's not shortchange the fact that we've got a real demand-based rally here.
Do you have any concerns about the weights, though, of the cattle right now?
Well, I'm watching two things real carefully: the weights and the number of cattle that we're harvesting, and those will go hand in hand. If we've had a period here where you've had packers down for repairs, cleanouts. One system had to do quite a bit of work on their coolers. And I know that there is some areas where there's some struggle with absenteeism, given the nature of the politics of the moment with stimulus checks, different things like that. I don't think that that's an item of concern this morning, or for that matter, for a little while, but the average weights yesterday were down 3 pounds from a week ago, still a little bit above a year ago, trending the right direction, which is good. By historical averages, Susan, still high. I mean, we're quite a bit above the 5-year average yet. So I'll keep an eye on that. I think that that's maybe something that we'll be talking about 30 or 45 days from now. I hope that we can maintain this solid 120 a day slaughter, keep taking some weight off. I mean, the cost of gain is high. Let's not kid ourselves. Cost of gain at $1 or more especially on something that's fat is probably more like $1.25. And then the guys in the South are paying $1 more for corn than I am. So I think that's going to drive, all other things aside, that's going to drive us to get more current.
All right, sounds good. Have a great weekend, Brad.
Hey, thanks.
That's been Brad Kooima joining us for this week's Cattle Call. Just a reminder, commodity futures and options involve substantial risk of loss, are not suitable for all investors. That's the Cattle Call. I'm Susan Littlefield right here on the Rural Radio Network.